First shareholder proposal, as Jim indicated, relates to the preparation of a report on Duke Energy Corporation's global warming-related lobbying activities as set forth beginning at page 31 of the proxy statement. This proposal is being presented by Dr. Thomas J. Borelli, who is appearing on behalf of the proponent, Mr. Sheldon Ehrlich. Mr. Borelli, would you come forward to the microphone to present your proposal?
Good morning. Good morning, Charlotte.
Good morning.
Before I prepared announcement presentation, I'd like to actually compliment Duke Energy and their staff. I've been a shareholder activist for about 5 years fighting cap and trade, and you guys are among the top in terms of dealing with activists. We know we disagree. We know we're going to continue to disagree, yet you allow us the opportunity to air our concerns in front of our shareholders. Unlike Exelon and General Electric, they hide behind their lawyers, and I applaud you for your courage. Now the proposal. We'll see after this if I can do it again. We urge fellow shareholders to vote for our proposal calling for a global warming lobbying report. The report will provide greater transparency about the way company resources are being used to advance progressive political goals. Unfortunately, our company is taking a lead role in the Washington, D.C. political game by advancing cap-and-trade legislation. Cap-and-trade is a scheme to force a reduction in carbon dioxide emissions by making traditional forms of energy, coal, natural gas, and oil, more expensive so we use less of these resources. Concerns over global warming is driving the political motivation for this legislation. Since about 70% of Duke's power comes from coal-fired power plants, legislative antics to reduce carbon dioxide emissions pose a significant risk to our company. Faced with the war over fossil fuels and the challenge of replacing most of Duke Energy's power plants over the next 40 years, CEO Jim Rogers has set our company on a risky course. Rogers decided to go all in, that is, put all our chips on cap-and-trade legislation. Duke Energy has joined hands with environmental activists, progressive elected officials, and major corporations such as General Electric to press for cap-and-trade legislation. The deal Rogers appears to have struck is the following. In exchange for Duke's financial resources to lobby for the legislation, the government will, in turn, reward Duke with billions of dollars worth of carbon credits. Last year, Rogers' deal with the government devil appeared to be working. The Waxman-Markey bill that passed the House of Representatives gave a large percentage of the carbon allotments to the utility sector. The Heritage Foundation estimated this translated into about $50 billion for utilities in the year 2012 and hundreds of billions of dollars in future years. Despite the heroic lobbying effort by Rogers and GE CEO Jeff Immelt, cap-and-trade is now stalled in the Senate. So shareholders, so what's wrong with gambling on the political system for profit? That's what essentially this comes down to. The answer is quite simple. A house built on sand will crumble. Or, in this case, a business strategy built on a carbon dioxide bubble will certainly burst. Rogers is betting our house on establishing a monetary value for carbon dioxide. Once established, Duke can sell excess carbon credits on a carbon trading exchange to other companies. Duke is also investing in the carbon offset market to profit from planting trees. Our company is also constructing a coal gasification power plant that can be adapted to capture carbon dioxide and then bury it underground. The plant is currently significantly over budget. But gambling on carbon is very risky. Shareholders, let's look at this objectively. Through cap-and-trade, the government, by decree, is making carbon dioxide a commodity, something that has value that can be traded. But carbon dioxide has no intrinsic value. It's ubiquitous, it's naturally occurring gas. Unlike other commodities that we're familiar with, like gold, silver, orange juice, or pork bellies, with carbon dioxide, you can't eat it, wear it, or build with it. Again, think about this. If Wall Street could not manage the risk with real estate where land has actual value, how can they monitor risk with carbon dioxide? Currently, the European carbon trading market is fraught with fraud. Goldman Sachs is testifying in Congress trying to defend its role in selling mortgage securities when the housing was beginning to crash. The housing market was crashing. One day, will Duke be testifying about selling hot air certificates to unsuspected trading partners? Shareholders, let's recall the housing bubble was caused by Wall Street thinking housing prices can only rise. With cap and trade, Rogers is inflating a green bubble where he's betting on the value of carbon dioxide. Finally, let's remember that cap and trade is based on the premise that burning fossil fuels is causing global warming. ClimateGate and the recent disgraced UN study on climate change calls into question the accuracy and the integrity of global warming science. In summary, Rogers' venture on cap and trade is a lose-lose for shareholders. If it does not pass, Rogers spent millions of dollars in lobbying and traveling around the world chasing legislative windmills. If it does pass, we're going to get stuck with carbon certificates that one day may not be worth the paper they are written on, and suffering from an economic burden stemming from higher energy prices. Shareholders, this is why we're urging you to vote for our proposal. Thank you for your time and your attention.
Thank you, Mr.